I've been in banking for the last 20 years, and I just swapped sides, if you wish, early in June, so a few months ago. So I've been on both sides, if you wish. In my last position, I was a board member at the investment bank of KBC in Belgium, and I was heading up the stock market activities, and also launched a digital online retail trading platform, like E-Trade, but a bit smaller, and equity crowdfunding platform. And the last 2 years, I was also responsible for developing and setting up the in-house robo-advisory program of the bank. And actually from there, I met and saw quite a few B2C robo-advisors in the market. And also felt the need, because my idea at the bank was 2 years ago to go out and engage a B2B provider, if you wish, which was not so easy. At the end of the day, that decision was not made, and still the bank today didn't launch a robo-advisor. So hence our idea that quite a few, and KBC in Belgium is pretty big and pretty innovative. There's a team of 40 data scientists, so it's not that they could not theoretically build it themselves, but clearly some other players, smaller and bigger, were likely struggling with that same problem, and hence we set up Investsuite together with a team which I will talk about more. So Investsuite, first, the name Suite stands for the fact that we want to play a role in the wealth management and investment space, and robo-advisory is just the first product. And you see a bit of our app there on the right-hand side. I met a few people, not everybody seemed to know what robo-advisor is, so I'll give a few statements, but for us it's, long story short, automated investment advice in a digital way. And B2B, as I said before, we don't believe in B2C, so we have only one face, and we try not to disrupt the financial institutions, but help them to fight disruption, if you wish. So we launched in June of this year, as I mentioned. We are B2B, but we have a very, very strong focus on the C side. You will see in a moment that when you look at the whole market in Europe, assets under management is very low. So it means that this potentially attractive product has not yet been put right in the market, in our view. And if you look at these type of people, I think a lot of robo-advisors are at the moment focusing on people with assets between 5,000 up to maybe 50,000. So we believe there's also another segment on the low end of the private banking side with assets between 100 to 200,000 euro up to 2 million, where such a product could be of great advantage. At the end of the day, if you go back and you remember these folks I just showed, let's say you have 30,000 euro or 40,000 euro as a young couple, 35 years old. So what are you going to do with that money? The interest rate is low, and the stock market is not for everybody. For real estate, that's not enough money, so mutual funds are left over. So I'm not going to comment on the mutual fund market here in the UK. In general, in Europe, it's not a very digital market, pretty expensive, and the benchmarks are often not beaten. To give an idea, we're also based in Poland. It costs 4% for a mutual fund, so that's very, very expensive, if you could agree with me, and the government is even putting in measures to lower that to 2%. It's also not very digital, and more, I don't have to say that to this audience, people want a bit of more of a digital experience like they're having with other providers. So the question could be asked, yet another robo-advisor. So I come back to my point I mentioned before. If you look at the markets in Europe, so there's about 10 trillion in savings and about 20 million in investable assets. And at the moment, our estimation is that maximum 5 billion is managed in Europe through, let's say, a robo-advisory service, of which Scalable has, I guess, 1 billion. So that may sound a lot, but actually it's very, very low compared to this huge basis. And our view is that it's not been put right in the market, because when you do customer surveys, and I'll show you what we are doing, a lot of people say, hey, this is a great product, so where can I have it? But I don't know any of these 100 robo-advisors, so that they're not well known, although in our circles, these names ring like a bell. For the average retail customers, they don't know it. The reason, in our view, that B2C is very hard in this space, at least, in contrast to, for instance, payments or lending, is that the customer acquisition cost is very high, and there's also a trust element. We can be the smartest guys in the rooms, but if nobody knows us, they're not going to give their money to us, if you wish. So we also believe, what is innovation? Innovation is often an improvement or a big improvement on existing things, so we're not inventing anything new, but on various levers we try to take a step forward. So first, and I'll come back to that in a second, a robo-advisor is automated investment advisor, as I said, so based on the answers that a retail customer can give, a portfolio is calculated through an algorithm, and that's the first point where we would like to differentiate, so to bring this algorithm or this approach to a slightly more sophisticated level. Also in terms of asset allocation, that is done fairly simplistic at this moment in our view. I already talked about the business model. So if you look at the 100 robo-advisors in the market, 95 or more are pure B2C and pivoting a bit to B2B. So we're only B2B, and we believe that has some consequences in terms of people you hire. So we have a lot of people, a number of people who come from the back offices of the bank and know how a bank infrastructure works. And of course, also on the ICT infrastructure itself, if you're B2C, you're connected directly to the market to execute the portfolio or the order. So here we work with very open API infrastructure to be linked to a bank's infrastructure. There are a number of other points. I'm not going to go through them all, but maybe the point 3, so if you look at the fact is that it's not yet been put right in the market. That's a fact. And so it's not so easy. It's not so easy to sell these products, also not for a bank. So we will spend a lot of attention over the coming weeks and months, even on an anthropologist level. We will work in Denmark, Poland, and Belgium to see how people really deal with their money and how this product could be sold in an effective way through a bank. I had the pleasure of launching a digital platform, not in robo-advisory, but in online trading. And so it's a little bit different than trading of an online lending or online payments. It's actually totally different. So it's not so easy. And there also we would try to not sell just a technology or an algorithm, but also sell a bit more on how a bank or a financial institution could sell this product. One more thing, which I'm not going to further dig into, and I'm obviously already violating startup rule, focus, focus, focus. But we also have a second product. So the suite in our name stands for the fact that we will build a suite of products. And this is a next-gen online retail trading platform. When you look at the online retail, and that's a bit my background, in the online retail trading space, then you see that these are all, actually, they were fintechs avant la lettre, Charles Schwab, E-Trade. Not a lot of people talk about it, but that's the real sector which has really been disrupted and virtually on the continent, I think here in the UK as well. All the online trading, individual stock trading is done through specialist providers, not by the banks. And for instance, at my bank, where I used to work, our internal biggest client was our wealth management division, because I saw that wealthy people, they don't like only the coffee, they also would like to see their portfolio online, to trade online. And either I would go to a competition or stay with the bank. And so they were our internal biggest clients, actually. But it's not so easy to build this. We get a few requests from banks to build this, and that will be our second product. So back to the asset management side. So is this a picture of the past? I don't think so. Private banks will always remain and exist. But we believe it will change. Just coincidentally, I was looking at the private banking portfolio of my wife a couple of weeks ago, and I realized like this cannot go on like that. So she had with her family 30 lines in bonds, which is way, way, way too much. Performance of between 2 and 3% in a totally non-digital way. So private banks will always exist, but I think they need to embrace also the technology side. And that's why we believe in this cooperation between fintechs and banks rather than in disruption, at least in this field. So as I mentioned before, we don't go directly to the retail investor, but we work with or try to work with challenger banks, private banks, wealth managers, and so forth. So hence comes in Robo as a Service, what we deliver then. We have a very modular approach. So our core, if you wish, could be the algorithmic framework, but we also have the front end. We have the MiFID onboarding model and the API layer, which is not a product as itself, of course. And so far, so we only exist a few months, but we've one LOE signed, and so we've entered some clients only on the algorithmic part, some even only on the front-end part, and some the entire suite. But I come from the banking world, so I know this is a fairly long sales cycle, and of course we realize that. So on the front end, this is made in atomic design. We use Flutter, so we can easily adapt it, customize it. We want to have a scalable product, but still it allows for rapid employment in a different look and feel, as being demonstrated here. So we're also part in the, it's a Polish bank, Alior Bank, and at the moment we're in their incubator program to basically develop a go-to-market product for the Polish market, and we develop it, of course, in their look and feel. The second point is on the algorithm. So I mentioned that there we would like to take another step. Most use MPT, so we go a step further. I see the time, so I have to speed up a little bit. So we have developed our own prop approach to the risk side, because what is portfolio management? It's optimization between risk and return. What is risk? So volatility is a very simplistic way of looking at risk. I'll spare you the technical details. Some of you will know them. And we've developed our own approach, which basically, and this is the last one I'll show, basically uses this approach. If you're an investor and the blue line is your portfolio, what you don't like are the drawdowns. And that's exactly what mathematically we'll try to minimize and create some kind of monotonic growth to the extent possible. We are in the moment backtesting that quite significantly. The blue line is we don't claim outperformance because that would be strange. But what we do claim is that for similar returns, and you see the green dot there, we have a lower risk. That's what we. That's our claim on the risk approach side. This is the IT infrastructure I talked about. Of course, we have a certain income model. I'm not going to bother you with that. My co-founder is a PhD in maths and computer science, set up the data science team of KBC with 15 PhDs. And the head of R&D comes from Schroders, where he was a senior quantitative equity manager. We have a very diverse team, and as you can see, sorry, went too fast, with the quants, the bankers, the designers, and so forth. We're currently today, because I was supposed to be in Belgium, closing our seed round of €2 million. So I had to actually sign and scan my things today.
Sorry, I'm gonna have
and that was the last point.
Okay.
Sorry for that. So thank you.
Thank you very much, Bart.